Hello, I'm Peter Herbert and welcome to the latest in our series of short CPD webinars looking at topical issues in financial reporting and auditing. Today's session is going to look at small LLP financial statements. What we're going to do in today's session is first of all think about how the 1A regime for small entities applies to LLPs. We'll walk through a set of accounts prepared in accordance with Section 1A for an LLP and then talk about some of the changes on the horizon. Okay, let's start off with the accounting choices for LLPs. This is an extract from a table within the LLP SORP. And what you'll see is that for small LLPs, the options available here are in the middle column. The top line there defines what we mean by small, long established, and the options then available. So what a small LLP could do, it could apply IFRS, it could apply FRS 101. That probably would be where it is an LLP which is sitting within an IFRS group, and it would therefore use the FRS 101 reduced disclosure framework for IFRS. It could apply FRS 102 in full, as you would for a medium or large LLP, or it could apply 1A, and many LLPs that we come across are small and do indeed apply 1A. And in addition, would need to embrace specifically the disclosure requirements of paragraphs 63 and 64 of the LLP. So we'll have a quick look at what paragraphs 63 and 64 mean when we have a look at some extracts from LLP accounts in a few moments. So onto the options available, and yes, many LLPs that are small will indeed embrace 1A. Let's now think about the requirements in relation to the primary statements, and then also the requirements then in relation to the notes to the financial statements. So primary statements, the requirements here very much the same as they would be for a similar sized small company. So what's required for a small company is you have got to have a profit and loss account. That's going to be required by law. In relation to statement of comprehensive income, obviously that's only ever going to be a requirement for any entity over and above the profit and loss account where there are other comprehensive income or OCI items. I'm thinking things like revaluation of PPE, not massively common, but if there were a requirement or a potential there for a statement of comprehensive income based on there being other comprehensive income items in the financial statements, that wouldn't be a requirement for a small company applying 1A, but it will be a recommendation of the FRC to include it as appropriate. Balance sheet is required, cash flow statement not required. Again, the rules here very much aligning with similar sized companies. And then in terms of statement of changes in equity, again, for small companies and small LLPs, this is recommended by the FRC, although not mandated. Remember the way that the small company regime works here in the UK. It's very much based, isn't it, on the EU accounting directive, and therefore if the FRC feels it's appropriate to gold plate and include additional requirements over and above what the EU directive mandated back in 2016, as things currently stand, these will be recommended inclusions and not inclusions which are mandated as such. So that's our overview. Let's then have a little look at the primary statements as they would appear in a real set of small LLP accounts. So here's my example, small fasteners LLP. There's my profit and loss account. Now that obviously is very much along the same lines as any other profit and loss account that you would see for a small company. The bit that's different from an LLP there is the bit at the bottom, and particularly their reference to members' remuneration, charges and expense. So any element of the profit for the year to which the members are unequivocally entitled. We talk about the profit being divided between the members. That will be charged as an expense to the P&L and credited then to loans due to members in the LLP balance sheet. That's not a specific requirement or aspect of small LLP accounts. That's an aspect of LLP accounts generally, and that's obviously something going on here. Some of the profits for the year, there is that unequivocal entitlement, and therefore that charge to the P&L of that expense. The residual profits that have not been divided in the year drop to the bottom of the P&L, as we see there in the example. Balance sheet required, and there we are. That's our LLP balance sheet. Again, the format very much along the same lines as any other balance sheet for a similar sized company. The aspect which is different from an LLP compared to a similar size, or in fact in comparison to any company that you might be preparing accounts for, of course, is the bit at the bottom there. And the bottom half of the LLP balance sheet captures all the amounts due back to the members. And we differentiate between amounts to which the members are unequivocally entitled, so loans and other debts due to members, and then members' other interests, which I suppose we would consider to be equity in the bottom half there of the LLP balance sheet. And again, that's a feature of LLPs generally, not a feature specifically of LLPs that are small. As we said, no requirement for a cash flow statement for an LLP. We do have the recommendation on the part of the FRC to include a statement of changes in equity. And yes, in terms of the LLP balance sheet, we've got loans and other debts due to members and members' equity in the bottom half of the LLP balance sheet. It's the equity element that you would include within your statement of changes in equity, as we see here on this slide. Okay, so that's our primary statements. Let's then think about the notes. Now, again, the requirements here for a small LLP are very much on the same lines as they would be for a small company. I guess when we're talking about small company accounts and the notes there too, we tend to talk about 13 key areas of disclosure imposed by the EU Accounting Directive way back in 2016. Here we've got 12. The one that we haven't got here is advances to directors. So overdrawn directors' loan accounts, section 413 of the Companies Act. Now that does not apply to LLPs for the simple reason that, of course, in LLPs, we don't have directors. We have instead designated members. So outside of that, the requirements from a disclosure point of view, 1A wise, very much the same as they would be for a company in terms of the way that they apply to an LLP. Now, of those various notes, the one that I suppose creates most interest tends to be the requirement around disclosure of related party transactions. And again, the requirements here are very similar to what you get in a small company. Particulars of related party transactions are to be given where such transactions are material and have not been concluded under normal market conditions. So again, as with small companies, it's the non-normal market conditions, RPTs, that need to be disclosed in a 1A set, with a limited number of categories of related party, specifically per the requirements here, members of the LLP that are related parties, and undertakings in which the LLP itself has a participating interest. And again, as we always say, from a small company point of view, the way the EU Accounting Directive really narrowed down the disclosure requirements for RPTs within small entity accounts does probably mean that in reality, relatively few of them do get disclosed these days, perhaps in comparison to where we were, goodness, 7 or 8 years ago in the days of the FRS for small entities in the FRSI. But that particular change of requirements for small companies copies across and applies in exactly the same way for a small LLP as well. Now, putting all that together, we then got our extracts from our notes to the accounts for our small LLP. I've just put in here notes 4 to 9, so I'm going to leave out notes 1 to 3. Those notes deal with, in my little example, statutory information, a compliance statement, and notes in relation to accounting policy. So reasonably intuitive. Here is my remaining notes, and again, reasonably similar, reasonably along the same lines as what you get for any other small company. I guess a couple of points to flag here. What you'll see is there's no detailed analysis of things like debtors and creditors. The reason for that is that this particular set of small LLP accounts is actually an abridged set. Now, we don't see abridged accounts that often in terms of the small company world, but of course you can abridge the accounts. And from a balance sheet point of view, what that tends to mean is that certain balance sheet analyses that would normally be included within the accounts will tend to get suppressed. And that'll be things like analyses of tangible assets, analyses of stocks, debtors and creditors. So that's been the aspect here. We've abridged the small LLP accounts. Now, of course, we can, when we're filing small LLP accounts in the same way that we do when we're filing small company accounts, we can, of course, fill it, which of course means that you're going to remove the director's report, the P&L, and any P&L related notes, and then you file what's left. Same sort of aspect applies to an LLP, really, in terms of filleting. We don't, of course, have a director's report in an LLP set of accounts. But if, from the point of view of bridging, you've not included detailed analyses of your tangible assets, your stocks, debtors or creditors in the first place, that will then mean there's less information to file when you then go on to fill it. So not particularly easy on the eye, filleted accounts, abridged accounts, I should say, but it does mean that from a filing point of view, you will actually end up filing less and putting less information on the public record than what you would do if you'd gone for unabridged accounts, which you would then filleting. The other thing I'll just flag on this slide in terms of the illustration there, so information there about the related party balances, and you'll see there reference in the first paragraph to in the event of the LLP being wound up, these liabilities will rank equally with debts due to other unsecured creditors, that's the loans due to members' balance, and no restrictions on the ability of the members to reduce the amount of members of their interests in the balance sheet of 30th November 22 or 21. Those specific disclosures within no date there, they're driven by those requirements you mentioned right at the start of today's short session, paragraphs 63 and 64 of the SORB, that impose a little bit more disclosure requirements than actually that is imposed specifically by section 1A itself. But other than that, really, what applies from a 1A point of view in a small company applies in very much the same way to a small LLP as well. So there we are, that's our small LLP accounts. Just in terms of the final aspect I mentioned there at the start of the session, just a quick heads up as to where things are going in terms of presentation of small LLP and indeed small company accounts. We do currently, of course, have, don't we, marching through Parliament, the Economic Crime and Transparency Bill. And what we're trailing lots on our accounting and audit updates currently here at Insight is the fact that this particular bill is going to give rise to a radical change in relation to what information gets filed at Companies House. Going forward, once this actually becomes definitive, you'll have to file your P&L and balance sheets and notes in full. You will get no dispensation from filing P&L information in the way that we have this last, many years really under the filleted accounts regime and the abbreviated accounts regime which preceded it. So much more information going on public record in relation to small companies, and that will copy across and apply in exactly the same way to small LLPs as well. Furthermore, what seems very likely is this legislation will actually also abolish the ability of small entities, LLP or company, to abridge their accounts. So big changes coming down the line. At the time of recording this session in May 2023, the bill has not yet become an act, and we're really sort of waiting with bated breath to see not only when will it become an act, but what will the time frame be to bring in these changes and remove the ability of small companies and small LLPs to fill it, and indeed to abridge as well. Okay, so I hope that was useful. A couple of things to mention before we close. First of all, I am running here on our public program on May 23rd, a more in-depth course on accounting for and auditing LLPs. There are still places available on that course. So if you're interested, do make contact with us or go onto our website and book. That would be great to see you on that particular course. And any queries in relation to today's session, do drop us an email, insight-training.co.uk. And for information on our full program of courses throughout 2023, do go to our website, www.insight-training.co.uk. Thanks for listening. Hope that was useful, and I'll see you all soon.